Hello everyone, welcome to Just Invest Today, and today we are talking about Ray Dalio. Ray Dalio just came out on Twitter. He released this article basically saying that, guys, if you do not invest in the Chinese capital markets, you will miss out on stocks like Alibaba, JD.com, Baidu, PDD, whatever it is. You're going to miss out on all these Chinese stock market gains because you are afraid or you do not understand what is happening. So in this article, Ray Dalio breaks it down. I want to interpret it how I see it and how I'm thinking about it. And he is just basically reiterating that the Chinese market is still going strong, it's still fair, and all those talking points that people are saying that are going against the Chinese and what they're doing, it's kind of like they're not understanding what's happening. So here in this article, we're going to break it down, see what Ray Dalio is saying, see if we agree, if we disagree, come to your own conclusions, see if you can understand what he's saying. So let's get into this video, let's get into what he wrote down. So understanding Chinese recent moves in its capital markets. So recent Chinese policy related to Didi's listing controls on data usage and China's education companies have been converted into non-profits have created a lot of doubt about capitalism and capital markets in China. So I'd like to help clarify what is going on. And this is very true. Everyone is afraid of the Chinese stocks. We see what just happened. The Chinese sector crashed around like 30-40%, probably more, in just in like couple weeks. Like, it's been going crazy. So let's get into it. I understand that's confusing to people who are not close to what is happening. Since I started going to China 36 years ago, I found that most Western observers who do not have direct contact with policymakers don't follow in detail the patterns of the changes, have tended to not believe that the Chinese Communist Party usage of capital markets to foster development is real. They interpret moves like these two recent ones as Communist Party leaders showing their true anti-capitalist stripes, even though they trend over the last 40 years have clearly been so strongly toward developing a market economy with capital markets. So that's interesting because a lot of people see this as just recently. Like, I don't understand. Like, just recently, people are just saying, "Oh, China is anti-capitalist," but the developments have shown otherwise. Like, they just forget everything that the Chinese have done up to this point, and then just focus on what just happened. It's the recent bias that's happening. You just see what's happening now, but you just, for some reason, you just miss out on everything that just happened the past 40 years, and that's what Ray Dalio is talking about. So capital markets with entrepreneurs, capitalists becoming rich. As a result, they have missed out on what's going on in China and probably will continue to miss out. So you're saying Americans, Canadians, whatever, Europeans are missing out on what's happening in China right now, and you're going to continue to miss out if you don't invest in stocks like Baba, like JD.com, and all those cases. In this case, the policymakers signaled to Didi that it might not be the best to go ahead with the listings, and they understandably want to deal with data privacy issues. In the case of educational tutoring companies, they want to reduce the educational inequality and the financial burden on those who are desperate to have their children have these services but can't afford them by making them broadly available. They believe that these things are better for the country, and even if the shareholders don't like it. So that's what happened with all the tutoring stuff. That, guys, China came out and recently said that they want to increase the number of kids you can have because the population is decreasing. So they need to do something about that. And one of the major concerns in China is that they're not able to afford childcare education because Chinese parents are always competing to have their child in that #1 spot, and they have to do all those after class tutorings, and that's hours on hours and hours, and that costs a crazy amount. So the one kid policy that was happening the ability to do that was capable because you only have one child, but when you have 2, 3, you can't get all those private lessons for those kids. Like, it's impossible. And China's not even that rich of a place yet. Like, they're coming on their way, but it's still in the workings, right? So I remember a number of such analogous misinterpretations. For example, I remember how the Chinese retail investor bubble bursting. Okay, so he goes into a lot of analogous stuff that will happen in the Chinese markets, in the American markets is basically the same thing, but people are not looking at it the same way, and they're saying that the Chinese are anti-capitalism and they're doing all this stuff, but even though the Americans have done the same thing in the past. So though it's all Chinese policy makers successfully manage the fallout, pursue their goals, the direction of their actions never changes. It has been in support of the fast, steady development of the capital markets, entrepreneurship, and openness to investment to foreign investors. So I encourage you to look at the trends and not misunderstand or over focus on the wiggles. And the wiggles is basically the up and downs of the market. Stop focusing on that. Focus on what the Chinese are actually saying, what they're actually doing. They came out and gave you a plan of what they're doing in the markets. So to understand what's going on, you need to understand that China is a state capitalist system. This is very interesting, which means that the state runs capitalism to serve the interests of most people, and that policymakers won't let the sensitivities of those in capital markets and rich capitalists stand in the way of doing what they believe is best for the people of the country. And that's a mouthful. So it's basically saying that there is capitalism in the system of China, but the state, the government owns that. So basically saying that if you're doing anything outside of what is going to be good for the people, then you're going against the country. So you can't just do everything in your self-interest. It has to be going towards the country's goals, which in America and in Canada, it's kind of different in the sense that you can do whatever you want. It doesn't matter who you're affecting, how you're affecting the community, what kind of policies you're making. So I understand the different viewpoints, right? And that's what basically the difference between the capitalistic systems, right? Is that China understands that within the capitalism and people becoming rich and entrepreneurship, they still have to go towards the country's goals. Rather than capital markets, capitalists have to understand their subordinate places in the system, or they will suffer the consequences of their mistakes. Kind of Jack Ma. He was kind of going against the government, talking against the government, saying this is bad, this is not going well, even though China was saying this is the best for what the people need and what the people want. But then Jack Ma had a whole different saying that you don't know what you guys want. So that's where the whole hiccup came. For example, they need to not mistake their having riches for having power, for determining how things will go. You also need to understand that in this rapidly developing capital markets environment, Chinese regulators are figuring out appropriate regulations, so when they are changing fast, they aren't clear. That causes these sorts of confusions, which can be misconstrued to be anti-capitalistic moves. And that's the issue right now. Like, the government is catching up to what people are doing and how the markets are adapting. Before, they were just letting everything go. They're kind of keeping a blind eye to all these bad practices that companies were doing, but now they're very focused on making sure everything is fair. People are getting paid fair wages. Moms and families are able to have more kids, stuff like that. So they're more aware of the problems in China. So you also need to understand the global geopolitical environment. This is very interesting. Changing leads to some changes. You can see that reflected in the U.S. government policy shifts, such as changing its policies about Chinese companies listing in United States. So this is going to be interesting. So the policies might change of Chinese companies listing in United States. So keep an eye open for that. If this is true, this is going to have future ramifications, like huge. Threats to prohibit American pension funds from investing in China. Wow, if that happens, man, that's gonna be killer for the market. If Biden comes out and says that pension funds cannot invest in China, damn, that's gonna be crazy. It's gonna crash China markets like crazy. Probably providing more opportunity for people in China to make money on those investments, because those companies are still gonna do fine. They're still gonna grow. Even without all that foreign investment, they're still going to keep doing what they've been doing. Assume such things will happen in the future, invest accordingly, but don't misinterpret these wiggles as changes in trends, and don't expect this Chinese state-run capitalism to be exactly like the Western capitalism. And that's another thing. People think it's analogous. Like, they think the Western should be exactly like the China. So if we see anything different in what China is doing, it's automatically assumed as bad because they're not doing what we're doing. But it's the two different countries, so you can't expect that. Having said that, I do think it's unfortunate that Chinese policymakers don't publicly communicate and reasoning behind their moves more clearly. And that's interesting. This is causing all this market crash, all the crashing of stocks, because they're not coming out and communicating. They're just hammering down. And everyone has this preview of all what China is about. It's all about killing companies. So not communicating, plus on top of having that pre-notion of that China is bad, is going to cause all this fear. So as for investing, I see the American and Chinese systems markets both have opportunities and risks and are likely to compete with each other and diversify each other. Hence, the both should be considered as important parts of one's portfolio. So you should invest something into China, no matter if it's 5%, 10%, whatever, 20%. Understand your risk, what you're doing, know how you can probably benefit, because guys, China is coming up. No matter how you feel, how you like it, China is rising. It doesn't matter. It doesn't care about your feelings. They're going to still do what they do. So no matter how you feel about it, it's either you accept it, you don't accept it, you just lay back and watch, or you invest and you see it grow, or you have values that you say you can't do it because it's China and China bad. So take it as you see it. I urge you not to misinterpret these sort of moves as reversals of the trends that have existed for the last several decades and let that scare you away. So there it is. That's Ray Dalio speaking on everything when it comes to China and what was going on in the market. So there it is, guys. If you like this video, like it, subscribe to my channel, and I'll get back to you in the next video. Peace.